right, a good day to all. Sam here with you on November 21st, about middle of the day. And today, of course, we're doing some crypto assets here. So as we traditionally will do, we poll the members. We let them choose what gets the analysis here. And first up, I've got Ethereum to the dollar. I'm on Coinbase. Or I guess we don't call it GDEX anymore. Coinbase Pro, I guess we call it. So here I'm on Coinbase, and a couple of things here. First is I'm always trying to simplify if I can, particularly as it relates to an Elliott count. What's the simplest thing I could trade here? Could this be just an ABC? Well, you know, it's hard to find a reason why it couldn't be, considering where we are down here, and we have this dominant. We can certainly see this dominant three-wave structure here of this correction. Now that's one hell of a correction. But there's a few things here in terms of trying to identify any type of target down here or a technical level where we might anticipate either a target being hit or a potential area where you'd look for perhaps an opportunity to be on the buy side. Now, granted, that's, you know, if you're buying down here at $100 here, certainly there's not a huge amount of downside, right? I guess it's always a function of how much you're buying, but it's, you know, at this point here, with targets down here around $100, you got to put a level on 0 just so you're not projecting beyond that. Hard to imagine, but so as we sit here now, there's a couple of things that I think are worth noting here in terms of trying to see what is this market responding to. So, of course, the most obvious thing is just go swing high to swing low, pull that up and see where we are. Well, if we're going dominant swing high to swing low, you know, this bothers me a little bit at first glance because it's not to the 50. It's too far for a front run. Well, like so many in the space here, Bitcoin, obviously or clearly the most obvious example here, where it's the second pivot. They seem to have used the second pivot here. So we get a clean visit back here to the 50, get through it. Now it looked like we had a contender here for that target to be reached, and it may very well be that this little reaction here is profit being taken. It could be that we're headed towards a second target, but note here, that's under 0. So my point being, you want it when you get down to these levels, you want to make sure you're not projecting down below 0. So that's you kind of got to do it this way here. Well, there's a way. I can't remember how to do it. There's a way to set this so it's exactly at 0. But we'll just, you get the point here. Just wick it off so you're not projecting below it. All right. So let me open this up a little bit here. So because I'm looking at that and I come back here and I go, I just don't like it. So it fits better in terms of this target down here, but I'm a little suspect of this pivot. So I look at it and I go, well, what else is there? Is it something as obvious as just we're returning back to this area of supply? So off of this low, which was very technical. So if we back up here, I think this one here. So swing high to the first low. We broke the 786, but we nailed these targets. If I keep bringing them down, so then you've got this right here. So this certainly looks like this is algo, right? It's very hard to argue with that as algo participation, right? So swing high to this pivot low. I have it labeled as a 3. We come back to the 4 with that. Now that is a clear front run, and we go to target damn near to the tick. So we know this is a technical pivot. Now, right, so here's our second target here. Could this just be that we hit first target, we get this retrace, and now we're on our way to second target, which is at $22? It's certainly possible, right? So that could well be an algo just stays here. I think that's less likely given the size of this move off of that, but the precision of this tells me that that's an algo participation. So as we might do, we'd go to the next technical low, but I'm here going, why does it stop here? That's always the question. If it's not right at a 50 or right at a golden zone, you know, depending on where you're analyzing, you might be looking at a wave 4 or something like that. Then you can understand it. For a B wave, which we know is much more likely to go from the 50 to the 786, I kind of look here and I go, what am I not seeing? What am I missing? Well, of course, we do have this little area of supply that was clearly the market was dumped here. We come back to this supply and then we dump again. So it could be just structural. That's a possibility. I'm always kind of curious to look for some sort of fib relation, something technical to help me identify that this is a significant, well, as to why they would have used this, right? So let me say, so again, is this the front run? Is the market so weak? Are they using something we can't figure out? Well, I did notice this. So let me just take this off here. So the first thing you got to do, if we're trying to identify this as an A wave, we got to look at this and say, well, okay, first thing, are we sure that the third isn't the shortest? Well, if I dial this up, length of the 1 projected from the 2, we go exactly 100%. Exactly. So I have a contender here. I think it's actually through it by a couple of ticks, because when I really zoomed in on it, it was through by a few ticks. I could be slightly off here as I'm recording this. Yeah, I think I'm spot on here. So we're through just barely, just enough so that we can be clear that the third wasn't the longest. But this 100 gets my attention. So like the one, so I start thinking, okay, so hundreds seem to be pretty interesting here. So then I go down, look here at the 4, maybe. So then I'm looking for the length of the 1 through the 3 from the 4. Well, where does that put me? Let's get that right here. Oh, is this something I should be paying attention to? Well, I can't ignore the fact that I'm sitting right here. Well, look where we are. So maybe this is something that's worth noting. So it's certainly, I'm trying to build a case down here. So the first thing you see is that I've just got some structure here, prior resistance, right here. What are we, 100? Call it $100. So I've got this 100 here. Okay, so I wick it off. All right, it's one more thing I can look at as a possible contender for something technical that at least I can lean into to give that some credibility. Well, then I start looking at this pivot relative to these, and I start thinking, well, maybe. So I just start looking. So I take the length of this 2 and project it from this 3. Well, we don't quite make the 100 there. Interesting. So I just keep experimenting. I go to other pivots. I look here, and this, I couldn't help but notice this. So look what we get right here. So all I'm doing is I'm taking the length of from the 1 low to the pivot of the 2 high, and I'm just looking for something technical, right? 3 doesn't quite catch it to the tick. If I go to the A wave low, so I'm projecting the distance of the second wave from the proposed 5 wave. I'm just looking for something technical. So now I can kind of build a case a little bit more around this. So I've got an area of supply up here that we just bounced into. I've got technical confluence here, right? So these kind of this doesn't happen randomly. It just doesn't. You're gonna have to trust me on that, right? So some algorithm is working on this in some capacity here. We don't need to understand it. We just need to be able to identify it here. So this is a technical pivot. So as I'm working through trying to understand why is it stopped there. Now, right, simplest thing, came back to an area of supply. But I want to see some precision in those pivots. So I look at that and I think, okay, well, that 100 seems, so we got the perfect 100 here, then we get another 100 here. So this swing parity seems to be something that's at play. Well, as soon as I'm thinking swing parity, that makes me think about the wolf range. So I just switch this over to the wolf range, right? So it's just range expansion, right? I just call it that. The guy who taught it to me. So I look, so first thing I do, okay, we're coming straight down. I go right to this pivot, which we knew was technical. I look at that and I go, okay, well, there's my first range, 50, second, it's not to the tick, but look where my 100% of that range expansion is, right? Again, I'm starting to build a case down here for more confluence, right? So I've got a little pocket down here, so maybe, right? Maybe this is simply just the range expansion of that initial range. Again, these aren't to the tick, but you're certainly in the area. Right? Again, it's what else is there to see? If I keep moving these down, well, now we got the 50. So is it here? Well, that's pushing us below 0. So then you look here, well, puts the 50. So if we take the full length of the start of the correction to the proposed wave 3 high, now I got the negative 50 right there. So I'm kind of saying a fairly solid case for a pretty substantial collection of technical confluence down here. But then, we got to keep looking. So is there anything else here relative to if this is a C wave that's completing as an impulse? I'd be looking for some structure related to, pardon me, I'd be looking for some symmetry or some wave relationships that are consistent with Elliott wave relationships. So I start working through them. So I take the length of the 1 projected from the 2. All right. Well, so first thing I see is that third is not, so well, you can just visually, you can see it. 1's longer than 3. We can see right now, if we're going to base here, that 5 would be shorter than 3. We can just eyeball that, but look where I get 100% projection of the 1. So again, I come back and I think, wolf range, maybe. Is there something here I'm not looking at? Well, here's the minus 50, here's the negative 100. Now I'm below 0, so that can't work. Maybe, is it here? Is there something I'm missing? Is range expansion here? Well, it looked good here. But if I just start looking here, this looked like the first time, so we hit 100 exactly there. Right, so typically what I'll do with these, when we hit the first 100, then I'll use that as the next pivot. Here, from this initial range expansion, we hit 100 to the tick, so I've got a new range expansion. Right, so maybe I'm fattening up my confluence zone down here, putting that at 116. All right, building a case. That's 3-4 different components clustering down here to give me an area of interest, if not for picking the turn, at least an area where you might start thinking about some accumulation or looking to identify a potential move out of here. Now I'm on an 8-hour chart, so if you want to be more conservative, let's get something confirmed to move out of here, and then you take the first retrace looking for that move out of it. I got to say, it's pretty tempting when you consider the potential of Ethereum across all of crypto, and we think about where it's been, where it could go. It's mighty tempting to just start accumulating it down here, because if we are going to have another bull run, this is likely the last time. I should be careful about this language here. It would be surprising that if we are going to get another bull run, to see Ethereum back here below 150 bucks. Not that it's not possible, right? Just if we're ever going to get a crypto bull to go again, right? And that's a big if at this point. We have to consider that possibility. I think that's extremely unlikely, but it's certainly in the realm of possibility. So something to dig us out of here, some fundamental event. Is it? Most of you know what's in the background here. There's some very positive developments for the whole crypto space as we go into the first quarter of next year. But until then, it's hard not to be tempted to start accumulating Ethereum down here. It's certainly a temptation that's worth considering. Now, this is not kids' tuition money, right? But this is certainly a place where you might, if you're a long-term bull on crypto in general. You know, we just worked through the top 5 coins, and you started accumulating some of that. Something to consider. Right? It's not financial advice. I teach when I'm on here. This is an area that you might certainly be paying attention to as potentially an area to start dipping your beak a little bit for some accumulation here, on the assumption that Ethereum is not going to zero. Right? Maybe if you're uncomfortable with that assumption, then you're much better to wait and because there's certainly plenty of time for this to start moving. Just to get back to some of these prior levels, let's get to 200. Right, so we're sitting down here at 150. So a lot of things need to happen here. But in terms of developing this area down here, additionally, we can take wrong one here. As we look into this C wave here, if I've got a relationship between the length of the third, now I've got to go back to my measured move here, get off of the wolf range. So let me go back to a measured move here, and I can see, well, I'm going to take this off here. We don't need that anymore. So I can look at the length of my third. Well, if I've got this right on, let me open it up a little bit so you can see it better. All right, so length of my 2 to the 3 low, get it right here. So here's our 4. Right, very weak market. So note here this little bit of structure that we get. So this prior resistance prior support becomes the resistance. So we get this little pivot here. We come right to this zone, right to the 23.6, and then we come down. Well, look where that target is, right down here in our box. All right, that's targets right about 100. So I'm kind of stacking some components to build this technical level down here. Let me reset. There was also this, if I start thinking about applying some GAN tools, where if we're trying to accumulate as much, a much technical confluence as we can. So GAN approached expansion differently. So if we just take that, let me put my GAN expansion on this. So you can see here, All right, well, actually you'll understand it better if you haven't seen this before. Let me put the whole GAN suite on here. So hang on. Okay, so if I go swing high to swing low, right, so you understand where this is coming from. So let me put GAN on here. Okay, so GAN split everything by 12.5. So we have, so you can see starting here, well, let's see, we have to start at 0. So we go 0, 12.5, 30, 25, 30, I can't even see them because of my, let me take this off here so I can read them to you. All right, so let's get rid of that and let's make that. There we go. Okay, so let me line that up again. Take this off. Bear with me a sec, guys. Here, I just want to get you this. All right, so here we have it. Okay, so we go from 0 to 12.5, 25, 37.5, 50, 62.50, 75, 87.5. So you see the similarities between the Fibonacci relationships, but the important point here is that GAN wasn't making an assumption. This pivot wasn't necessarily relevant. Like, it wasn't critical that we went to 37.5 or 50 to the tick. The point was that we had this projection down here, this range expansion. So if I carry this forward, so I go to, you might think of it as negative 12.5, negative 25. So if I take this now off of here, this is how you would look at it. So here's the move. Shit. Here's the move down. Here's my pivot. So I'm projecting down. Here's 12.5, here's 25, which is essentially right on top of all of those algo targets that we had. So we have this big fat cluster of multiple approaches and technical approaches, I guess we can say that, to identify this area down here from 113 to 100. We'll call it 85 if we're on the low, 91. So we've got about a 20-point range down there, $20 range. We've got just massive confluence down here of an area where we might anticipate, if not the absolute bottom, at least a reaction. So that reaction could be enough for us to say, hey, well, I've got something to work with. Now, again, you want to be ultra conservative. Let's get a motive wave coming out of the low, and then we could potentially be positioned to do the buy between the 50 and the 618, looking for the 3. Of course, we can't just immediately assume that if we got a motive wave, that it's a one wave, because we could certainly have an ABC and then be headed down again. Remember, here's 0. So that would be very tradable. So I wouldn't avoid that trade just because it might be a B and not a 2, right? Because you could trade into the C as well. If it turns into a 3 and we end up with something like that, well, just all the better for that trade. I guess the point I'm trying to make here is that this is an area, if we see it offered down here in the under 120, you might, that's an area to maybe start, a little accumulation. But again, you got use your own judgment about your risk tolerance, understanding that if you're buying at 120, your max downside's 0 if Ethereum's going out of business, or just going. There is no business. Let me rephrase that. Is going to cease to exist for whatever reason. All right, if we're going to cease to exist. Again, do you think that's a bet I'd be willing to take? I'm trying to be guarded in my language here, but that's a risk that I'm comfortable taking. So a buy down here in this range is very attractive. I think you might, for me, I'm rephrase again. Sorry, I just got to be careful about what you say here. So this, from an educational perspective, how about I say it that way? If you were down here and you saw that Ethereum was offered under 120, that might be an area to consider evaluating your risk tolerance and your trading capital, and consider a light position down there to accumulate, with recognizing that there will be plenty of opportunity should this start to move to rally. So you don't have to buy aggressively down here. Don't do any more than you can comfortably withstand if this is going to continue to move lower, and we're going to start to expand down here. So we do have this very nice large level of confluence down here, but that doesn't necessarily mean that we couldn't just break right through it. Right? Nothing says that we must bottom here, but there's certainly a lot of evidence to suggest that you've got long-term targets that are all within about a $20 range. And if we see a reaction coming out of there, that would be something to pay attention to. How about that? That's about as carefully as I can say it. I think you get my drift. This is an area to be paying attention to. All right? And you might, want to take all the Elliott Wave, you want to take everything out of it. Just look at a blank chart and say, well, we're coming back down here to some very long-term support levels here. It's a struggle to call that support, but it's technically there's a little bit of support here. So is this an opportunity here? I think it may be. So something to consider. Now, we may not get there. We may be pivoting right now. The low could already be in. But if you see it come down tagging some of these levels, that's a place to look long and hard. All right, guys, that went kind of longer than I thought I would there. So just, it's ugly in crypto right now. We all know that. This is about as severe a bear market. I was here for the tech meltdown and for the internet bust. I was a broker during that time, so I've seen this before. It's discouraging. I do understand, but if you're a long-term believer in the crypto revolution, that's what I see. I see opportunity. I don't see despair. All right, guys. With that, I'll wrap it. I've got one more to do today. We'll be back in a little bit.